morning, ladies and gentlemen. First of all, I would like to thank Reimagining University for giving me the opportunity to come here today. So as the topic goes, I have spent last 2 decades of my career serving the underserved, I call them personally. The regulation defines people who are financially excluded as poor people, which I have a problem with. And we've been advocating that the term poor person should be removed from the regulation because you must not call your clients a poor person. Right? So with that, I will use Simon Sinek's golden circle to structure the conversation today. We are here to discuss exclusion. And today I'll try in the limited time that I have to structure the discussion and leave you with certain thoughts that you can ponder upon, think about, and we can collectively look for solutions for the problem we have. We're a country of 250 million people. When we talk about exclusion, 80% of Pakistanis are financially excluded. Many people confuse that if you have a mobile wallet or a bank account, you're financially included. I disagree with that as a practitioner. You need to have insurance, credit, saving, payment products to be completely financially included. So 11 trillion rupees are lying outside of the formal sector. This is the state bank data I'm reporting. Around 40% or more of agri-produce goes to waste because of no storages. 26.6 million children are out of school. This is a dated number 7 years ago. I'm sure, sadly, this may be higher as we speak. And I can go on. And there are many disturbing stats that we need to look at, deal with, and counter. So as practitioners, as bankers, because we're talking about banking the unbanked, how do we do that? We define the problem, and then we talk about potential solutions that people should have credit, people should have access to insurance, savings. But what is the how part? The enabling environment, the governance structure, the regulatory framework, and the kind of institutions that are required. I don't see many people discussing about the kind of institutions that are required to deliver the services to the average Pakistani. Talk about the banking sector. We've got about 35 odd commercial banks. We've got about 12 microfinance banks, many DFIs, non-banks that are in this space, about nearly 40. And when I share the numbers with you in terms of penetration that we've had, it's not much to write home about. Like, let's talk about microfinance. We've got about 12 million micro loans in a country of 250 million people. And when I say loans, these are not clients. When you peel the onion, you will see that an average person has taken 2 or maybe 3 loans. So when you go down to the client level, you're hardly under 4 million. Then you talk about households. Every person, in a house, maybe 8 people household in Pakistan, 9 people household in Pakistan, brother, sister, whatever, they have taken 2 loans, 3 loans out. So you talk about less than 1 million households that we're serving. So 30 years of formal microfinance, and I'm particularly focusing on microfinance because commercial banking I'm going to touch upon separately. We have not done much. If you look at Bangladesh, you look at India, they've got single institutions serving 12, 13 million clients. In our case, the larger ones are serving 2 lakh clients, 3 lakh clients. So why is there such a difference? Why is there, when you compare the stats, it's just not comparable. Now let's talk about policy. In India, for example, all the large commercial banks are mandated by regulation to transfer X% of their deposits towards institutions that serve the underserved. There is no such policy in Pakistan. Maybe there is room for debate that this funding should be made available to these institutions to serve the average Pakistani. This is on the governance side, and then multiple regulatory interventions can take place. But let's talk about the kind of institutions we need. So I'll use another analogy that Neil Ferguson, historian, professor at Harvard, used in his book Civilization, where he said the Western world downloaded these killer apps, namely rule of law, better healthcare, and so on and so forth. And so what happened in the last 500 years with the West. Similarly, the killer apps that are required, to use the analogy, same analogy, by these institutions are, in my view, around 7. Number 1, capital. Now, if you look at the landscape of non-banks, financial services providers, what are the sources of capital today? Shareholder capital, yes, tier 1. Do we talk about additional forms of capital, a spectrum of capital? without getting too technical here, additional tier 1, tier 2. So there has to be a spectrum, again, through regulation and some out of the box thinking also for these companies to thrive and scale. Second, funding. Banks, the superpower that banks have is public money, deposit. Non-banks do not have that. So let's talk about microfinance banks. You can take deposits. At the same time, the capital markets. Is there enough activity in our capital markets? How many retail TFCs are we doing? Commercial papers, privately placed TFCs, syndications. Again, I can just keep on adding these potential structures, but unfortunately, not enough is happening in the country. So we need a spectrum of funding on these balance sheets as well to be able to fuel the growth. And what is the growth? Provision of credit. Now, when you talk about serving the vulnerable, you talk about serving the average Hari or Kisan or an MSME or a retailer in a tier 2, tier 3 city or a villager for that matter. So the risk is high for repayments. Obviously, these people are more vulnerable. So you need safety nets for these institutions. What could be a safety net? Collateral, gold. Not everybody would have gold. Any other form of collateral, first loss guarantees, pari passu guarantees, a novel structure by commercial banks and insurance companies to insure the portfolio against circumstantial default. Again, these are areas that need to be looked at so these institutions can actually be brave enough to go out and lend to the average Pakistani. Otherwise, locust attack, a massive flood is going to wipe out these smaller institutions. We see this happening every second year. And we say, for instance, look at the floods that happened 2 years ago. We say that the microfinance sector is wiped out. Well, I disagree with that. It is the vulnerable client whose livelihood was wiped out. And these were the institutions serving those clients, so they ended up booking losses on their balance sheets, right? So as a government, as a regulator, as public-private partnership, what is required here, we need to come in, all of us together, to deal with these issues and enable these institutions to bear these shocks. Now, these are three: capital, funding, and risk mitigants. This is the third app. 4, 5, 6 under the right technology, product strategy, and the channel strategy. When I say channel, we are sitting in the digital age. That's part of the topic as well. That how do you bank the unbanked in the digital age? Luckily, there are two things that Pakistan has that not many countries have. The tele-density, around 120 million unique SIMs. That's a very high number for a country of our size, with 250 million people. So that's the channel that we have. Are we using it for financial inclusion? Yes, we've started using it, but more can be done. The other, NADRA database. For Know Your Customer, KYC, AML, I think not many countries in the world have such a strong database. We have it. So the enabling environment exists, and if we are able to combine all these things together, we can actually enable these institutions to offer services to the average Pakistani. Now, this is the how part. Governance, regulation, the kind of institutions. The what part now. The what part is most important. Why? You must have heard this word, many of you, banking as a service. I'll try and explain. In my personal view as a practitioner, at this time, banks have to pivot, evolve from product providers to ecosystem enablers. Now, what do I mean by that? Say, for example, you've got I can't take names. What do they need to scale? They need financing, embedded finance. Do they get funding? No. They're considered high risk? Yes. So the issue that an average Hari is facing, a digital e-commerce provider is facing similar issues when they go out to raise funding. Now, how can banks come in? The basic definition of banks in the books that you must have read is they are financial intermediaries. They pick up surplus funds as deposits, they try and deploy them where funds are required, right, in terms of credit. So banking as a service is something where you turn your bank or banks into a platform. And all these budding fintechs or these people or companies that are in the digital space can come and sit on the balance sheet of those banks. You can provide funding, you can do a revenue share, you can do risk mitigants collective, and you can help them scale. So imagine a country, imagine Pakistan, where every e-commerce merchant can have instant access to financing. Every woman entrepreneur, home entrepreneur, can have access to fund their inventory. every digital merchant has a digital footprint. If all of these things come together, not only can we bring about financial inclusion, we can bring about an economic revolution, which is required in Pakistan. So I would want to leave you with these few thoughts that while the problem statement is there, what kind of institutions are required, and the size of the problem, unfortunately, it's growing faster than the solutions that we're bringing in. And hopefully, when we all come together, we'll be able to come up with the right solutions. Thank you very much.